The sky is blue, the birds are chirping, it's Friday, and we're back for the iGaming weekly news. Nico, how are you doing, my friend?
I'm good. I'm just perfect. Had a relaxing and nice week. I was in the arena while Manchester City had this clash of titans with Real Madrid, and once again shout out to the team of ID Now and Roger for inviting and having me. So it was a nice week, to be honest. It was a really nice week. What about you and your last preparations for the upcoming event in New York? I'm pretty sure you just sleep just a little bit with your preparations for New York. How has your week been so far, Pierre?
No, it's great. It's great to hear, Nico. It's great to hear. And also, good morning to the audience who is joining us here today. Just before we continue, I want to mention that we have a live chat here to the right today. So any comments on YouTube, Twitter, LinkedIn, and so on and so forth will appear here in the chat. So during the course of the hour here that we have in front of us, if there's any questions or if we say something very stupid, which I'm sure we will be doing, if we say something incorrect, feel free to correct us or come with your own comments here as we go along during the hour. That's the beauty of this concept, is that we can all share comments with each other. So looking forward to a lively discussion here. And Nico, yes, on my end, yes, we have our New York show in 2 weeks. This has been a project that's weighing us down for the last year or so. So we are just excited that we'll be able to finally pull it off now. And good morning to James as well. Nice to have you join us here. And James, one of the guys who will be one of the key presenters in New York, actually. But moving forward here today, Nico, we have an action-packed hour today. So I want to make sure that we get this thing kicked off today, so we can make sure to optimize the time we have to the very interesting discussion we have ahead of us, because it is basically Christmas for investors at the moment. And if you are an investor, you get Christmas 4 times a year. And those are basically the earnings seasons, Q1, Q2, Q3, and Q4. And so we are starting to see quarterly reports being released now. On the tech front, we had, of course, Meta's quarterly report being released here earlier, which was a positive surprise. And in the iGaming industry, this week is the traditional Scandinavian reporting week, and that's what we're going to cover today, which is essentially the quarterly reports of Evolution, Kindred, Betsson, and Kambi. Really interesting reports that were released here today. And we have as a special guest with us Magnus Andersson as well, who is a professional investor and author, who will be joining us here just in a little bit as well. But before we start as well, Nico, I mean, looking into the iGaming industry at large, like if you would take a helicopter view and just give your analysis of how do you think the industry at large is progressing at the moment? Because obviously we've seen a dip since about September last year. But what would you say is the current state of play of the iGaming industry?
To be honest, we are evolving, we are maturing, especially if you just head over to the US. Further investors, big tech companies eyeing on the iGaming industry per se. And one of the LinkedIn users just pointed out he wants to, eye us to have a look at India. So if these large of scale markets will open up as well, with the regulatory framework, this will be a total different ball game out of a sudden. Right, because if you just remember, when the markets opened in the US, we as the Europeans were like, okay, we will just head over and show the US folks how online gaming actually works. And then it turns out like, okay, the pockets of the US based companies are a little bit deeper than we are used to have them here in Europe, and out of a sudden they were taking over the market here in Europe as well. So for sure, it's interesting times, and on a weekly basis, we just see topics coming up. As of now, it's reporting seasons. You didn't even mention the Q1 of Las Vegas Sands. I just keep my fingers crossed that we always have an internal big agenda with the topics we want to discuss, and then we just end up not even touching half of the topics we aim to discuss. And as you already mentioned, also shout out to our listeners who always give us great insights, like Eric Reed once came up with the stickiness of applications of the DraftKings, etc. And this is what it's all about, right? So we are for sure not the experts on each and every field. We just use it as a helicopter ride, and then it's all about the audience who just gives us some insights, and we just slice it and dice it and discuss it within our 1 hour
Absolutely, Nico.
as well, and it's awesome.
Absolutely, we are like fat kids in a candy store when we do this thing. So,
Exactly.
so the time tends to pass by. But why don't we jump in straight into the first quarterly report here, which is Evolution? I think this obviously is out of the 4 quarterly reports, it's always Evolution that is front and center in these discussions. And so, without further ado, I would like to bring in our special guest here in the live stream today, who is Magnus Andersson. So, if our technology works here, we'll have a little drum roll. There we go.
Ooh.
Good morning to Magnus. How are you doing today?
Good morning. Thank you. I'm fine. Good to be with you today.
Great to have you back here as well, Magnus, to discuss Evolution. And I mean, just to jump straight into it here, Magnus, if you would summarize the Evolution Q1 2022 report from your own perspective, how would that sound like?
Well, I think that what was the most interesting this time was how the cost base was developing. I think that given that we had seen higher, perhaps than expected, other costs last time, it was interesting to see that they are coming down now, as we all really hoped there, because they were there because of the rapid expansion that the company is undergoing right now. On the other hand, we had a personnel expenses rising there, also because of this expansion. But generally, I think the market was very, very happy with the report, and that is for good reason, because well, those of us who have been following this company for several years, of course, for us this is quite a normal report. I mean, they generally tend to beat the estimates by a couple or 2 or 3 percentage points, which they did this time on the top line as well as on the bottom line. So, but since there have been so many questions regarding the growth prospects, since the growth was a little bit slower in Q3 and Q4, I think they really answered this quite clearly now that they are back on track. And I think that apart from, should I say, the usual soft RNG numbers that they have been producing all the time since they bought NetEnt, apart from that, I think they beat most expectations on basically on every line.
Absolutely, and you mentioned the RNG segment here. Is that a cause for concern? Do you think that they are not able to grow the revenues within that vertical?
Yeah, a bit. I think it's. I mean, I think everybody had hoped for a quicker growth there. We have now just a few percentage points on a yearly basis, and yeah, I think they have a lot to do there to create more attractive games and so on. But it's also somewhat understandable since there is so much competition within the RNG or basically the slots business. There's a huge competition and lots of companies, and it's of course this is always being compared to the live business, which is of course a completely different bird. It's I mean, the live business as a whole is growing rapidly, and the competition, as we know, is much smaller for Evolution there, since they are basically completely dominant in this sector outside of Asia at least. And I think we won't see we never know, of course, but I don't think we will see a rapid increase in growth within the RNG part of Evolution. But hopefully, I mean, they are saying that they are aiming for 10% growth, yearly growth there. So yeah, for us as shareholders, of course, we hope this will happen, or perhaps it will happen later in the year sometime.
Yeah, exactly. And I mean, it's an interesting subject, and what will make it more interesting and relevant is if we can have comparables to other RNG and the game producers. And unfortunately, there aren't that many game producers that are reporting numbers publicly. But what we do know is one of the kind of key competitors for Evolution on the RNG front, which is Relax Gaming. They are owned by Kindred, and Kindred just released the quarterly report as well, which we're going to discuss. And actually, the revenue from Relax Gaming was also flat on the quarter. They also decreased slightly on a quarter-to-quarter basis. And so maybe it is the case that we do see the market being flooded with games at the moment. There's some insane statistic I heard that there's like 100 games per day that is being released or something like that at the moment in the online casino world amongst all the
and
all the games.
That also it completely shows you the difference to the live side of the business, where you have, of course, releases regularly, but nothing even close to those numbers.
Yeah, exactly, and that's the competitive edge that Evolution has, of course. I want to bring up here on the screen just my 3 takeaways, and I would like to hear your thoughts on this, Magnus. If I look at the quarterly report, for me, what stood out is the fact that Evolution in the earnings call, Magnus Andersson, he committed himself to a 69 to 71% EBITDA margin, despite the unstable macroeconomic climate. So despite the fact that the inflation is increasing and we are navigating through a war that's causing uncertainty, the pandemic is still ongoing, even if we tend to forget it. And I just thought it just showed and conveyed so much confidence by still committing themselves to this type of EBITDA margin in this uncertain economic time. So I mean, really, like they are really flexing their muscles with this statement. A second point, which we just discussed, is the fact that the RNG vertical is decreasing in revenue. Cause for concern: how is Evolution going to grow this segment? They have announced that they will release 88 games this year, which is a significant uptick, and perhaps that's going to sway things in their favor. And a third point as well, which wasn't really mentioned anywhere, but is the fact that we haven't really seen anything around the New Jersey regulatory concern that came out of the short seller report back in December. And I would wonder if we can just put this question at rest at this point. Is it behind us? I don't think shareholders should particularly worry that there will be any repercussions from the New Jersey state regulator. I think that's behind us. So I think that's something that's interesting and worth to point out as well. Evolution will probably not officially make any statements here, and certainly not the New Jersey regulator. But it seems to me that is an issue that we can put to rest. What's your thoughts on these points, Magnus?
Yeah, well, I mean, for the margin there, I'm not surprised. I mean, given all the headwinds they have, I mean, they're growing so quickly now. You can see that you can follow, of course, which is a very good thing when it comes to being a stockholder in Evolution, that you can look into their lobby and see how the games or the popularity of their games at different times of day and so on. And there are also a tracker that someone has put up that follows this. I mean, we can see that they have a huge momentum, and not least and most importantly, this momentum is in their 3 big games, which is, of course, Baccarat, Roulette, and Blackjack, which constitute the huge majority of their revenue. And given that they have this momentum and the fact that they are very cost conscious, but still they also they never shy away from expanding where they have to. I mean, they say currently that they still underserve the market. They like to have more more capacity. But given that they are now such a big company, this doesn't affect the margin more than perhaps a percentage point here and there, as I mentioned in the beginning. I mean, going back 4 years when they built the big studio, for example, in Tbilisi, there was a huge impact on their margins when they were expanding because of all the costs for staffing, training, and all kinds of things that they wouldn't capitalize. And we can see this still, as I said, but much less than before because they are now so big. The revenues are so big, and I think, I mean, traditionally, which is a good thing to know if you're new with the Evolution, traditionally they are a bit cautious when guiding the margins. I think they are that also this year, because normally they tend to, towards the end of the year, they always have to revise this. And I would assume that in 3 months' time, when the second quarter is shown, I would assume that they will say that now we think that we will land in the upper reaches of this margin guidance, and then perhaps for the third quarter, I think they might revise it a little bit upwards, because given the scalability in the live business, I mean, this is only natural. You can always say that from quarter to quarter that there might be some up and down movement, but their business is so scalable. If you go back, for example, 3-4 years, the percentage of, for example, their highest cost, the personnel cost, has been more than halved as its share of the revenues. And I can't really see this stopping now, but of course there is always a ceiling. You can't have 100% margins, but given that they are now at 70%, and also as we spoke about last time I was here, I mean, people were saying in Sweden a few years back that, well, they can't sustain 45% EBITDA margins. It's not natural. I mean, the competition must come there. So, and then they had 50%, 55, 60%. Now they are slightly above 70% margins, and I don't think that 70% is where they flatten out. I mean, there is no reason for that, because since they're, I mean, we now have a bit less than 50% growth. I mean, if you grow by 50%, then your costs grow only by 30 or 40%. I mean, you have a margin expansion. That's only natural. It won't go perhaps to 95%, but I'm sure it will go above 80% one day if nothing really strange happens.
Wow, that would be, I mean, can you compare those type of margins and profits that Evolution is making to any other company and any other industry?
No. I mean, if you have, I mean, when we're talking about big companies above like $200 billion market cap and up, I don't think you can find it, not even in the FANG companies in America. I mean, you could find that in small or any company that's only licensing out its rights or something like that, because then you don't have much cost and so on. But otherwise, I mean, you can't find it in Sweden for sure. And I mean, I saw someone had made a list a couple of months ago. He found one major company in the world that beat Evolution when it came to margin, and especially if you look at both margin and growth, it's quite unique.
Yeah, it's truly remarkable. I mean, I also want to bring up another chart here, Magnus, which is kind of like from Twitter. Ali Gundes, I stole this the screenshot from Twitter. He points out here the source for growth on a quarter-to-quarter basis. Obviously, we saw massive growth in Q4 and Q1 of last year, and it's worth noting that obviously each quarter is building on the last quarter here, right? So when you look at these numbers, Magnus, like what's your takeaways here? We can see, of course, in the last quarter that much of the growth came from rest of the world and Asia predominantly. What's your thoughts here?
Basically, what we see here is the growth in the other markets, other parts of the world. And this has been really neglected by us investors, because it's all the talk has been in the last couple of years about North America, and North America is growing. But if you look at this rest of the world, which is mainly South America, we see twice as much, if you just count the euros for the last quarter here, you can see twice as big growth as in North America, and half as much as we have in Asia, which is 3 times as big a market still. So this is really impressive, and it's also very interesting. And I would hope that Evolution one day starts breaking out South America, because it's not only South America, it's Asia and Oceania as well, but that is very, very small today. And I think that is very, very interesting, because we have, as you know, this momentum here we have in South America, and also Evolution's presence in Colombia before, now also in Argentina and Brazil, where lots of things are happening right now. So I think that we will talk a lot more about South America in the future than as compared to what we have done before.
Absolutely.
I think it's very, very interesting to see.
I'm bringing up the question of North America here because this chart really shows the differences between the demographics on a quarter-to-quarter basis in terms of growth. And as you point out here, the North American growth is not that substantial if you look at the big picture. Evolution is only live in a handful of states in the United States, and the regulatory environment for iGaming is tough in the United States. It's not expecting any major states to launch in the near future either. What's your thoughts on North America particularly? Do you think that there is a chance for North America to become the most important growth market for Evolution, or do you think the future belongs to, as you mentioned here, kind of like South America and Asia?
Well, everybody would have liked to see a quicker pace when it comes to regulation in the United States, of course. But we can't just talk about the situation right now, because we have also the situation in America, because we have also now Ontario, which is very, very promising. It would be, if it had been part of America, it would have been a big state. And we also have which I think is the most important thing to follow, is the situation in New York there, because there are lots of talk about this, and we know for a fact that they are looking very deeply into regulating iGaming, as well as they have a sport now, of course. But if New York goes live, so to speak, there, and Evolution is there from the start, this will really change the picture for North America. Then we will really have, I'm sure, huge growth there. And we also have this situation there. The states are looking at each other. Of course, New York is looking at New Jersey, right across the river there, where all their tax revenue they are getting. But also, if we have a major state like New York, perhaps California is in play in a year or so. Who knows? We shouldn't just see that, okay, they're not growing as quickly as we thought. There are not that many states legalizing yet, and think that, this is not going to pan out as we hope, because America is such a huge country. If one day we have half of the country allowing online casino, this will be the biggest country in the world when it comes to iGaming, I'm sure.
Yeah, absolutely. And you mentioned the possibility of New York opening up here. Unfortunately for this year, it didn't make the cut for the bill. But what has been pointed out by the state senator Joseph P. Adabo, who was the state senator who championed the bill to legalize sports betting, is that he has said that sooner or later we will see online casino and casino gaming in the state of New York. He's just saying that it is a matter of time, basically. So this will be something to keep an eye on for sure. And as you point out, every state that opens is a great opportunity for Evolution, of course.
Absolutely.
We had a question here in the chat as well before this long spammy message showed up, which is what does Magnus think about the share price development? Any potential M&A in the future?
Those are very different questions. I mean, for the share price, I mean, it's I've basically given up understanding the share price of Evolution. I mean, the share price went down for several reasons, as we talked extensively about in the last podcast where I visited you. There are many reasons for this, but basically it's also that the market currently doesn't really like growth stocks. It just wants value stocks and so on. And I think that Evolution, even though it's growing so nicely and it's making so much money, I mean, it's really a printing press. I think it has been dragged down there, but I can't really make any clear assumptions there otherwise. But I mean, there shouldn't be any question now in the market that Evolution is right on track, that they are not threatened by competitors. They have not come close to any limits on their growth. And I mean, if you look also a little bit closer on the numbers with the picture that I sent you, Pierre, if we look at the fact that this quarter, the first quarter, of course, is 2 days shorter. It's only 90 days as compared to 92 days for the fourth quarter. If you there is Swedish up there, it says that increase in live quarter by quarter revenue corrected for the calendar effect. If we look at this, I mean, we have a total increase on 9% sequentially, which is great, of course, between 2 quarters. I mean, but that is the normal pace for Evolution. They grow around 10% quarter on quarter. But if we take this into account, we have a 11% growth for the whole company, and the 11% growth that we have for the live business, which is of course now 81% of the company. These 11% go up to almost 14% quarter on quarter. I mean, that is is insane growth. I mean, those are the numbers that you have for very, very young companies that are all of a sudden getting their first customers and growing like crazy. I mean, we have a huge company growing by where their main business, which is more than 4/5 of the business, is growing by 14%. And also, when you think about the fact that we have a bit of a Christmas effect and a New Year's effect on the numbers in the fourth quarter, I mean, that is very, very good. So, I mean, I don't think the market should have any doubts about the health of the business now. It would be almost ridiculous to have that. So that might lead to share appreciations, because having a PE on the current year on some, well, at least some conservative estimates about the profit for this year around 20 or 22, I mean, that makes no sense. I mean, we aren't that deep down in the hole in the world. So, and you can also see that Evolution, even though they had an office in Kiev and so on, and have some effect from the war, I mean, it's not really noticeable, or it's not noticeable at all in the numbers. So I'm optimistic, but I've been let down so many times by this stock in the last year. So we can't make any safe predictions there. But I think it's looking good now, because the valuation doesn't really make any sense unless you thought that the next quarter or the rest of the year would be bad. But I mean, there's no indication for this whatsoever. I mean, they have their issues with the RNG, but still, it's a stable business. It's not shrinking by 10% or anything like that. It's basically not growing more than a couple of percentage points right now. When it comes to M&A, I don't know whatsoever. I think they need to concentrate now on the slots business and make that a little bit more of a growth business. But I mean, they have surprised us before. It was a huge surprise to almost everyone that they bought NetEnt 2 years ago, and yeah, we'll have to see. I mean, it would be very interesting if they bought any of their small competitors in within the live sector. But yeah, I don't think that is what they are up to right now, but that's just my guess.
Yeah, interesting to hear, Magnus. And yeah, we're gonna start rounding off here the topic of evolution. But just a last question for you, Magnus. It's I mean, the report is just bulletproof. It sounds like, and Evolution is proving themselves as a very resilient organization. You know, there's a war happening. There is inflation rates exploding. The economy is in trouble. There is headwinds regulatory-wise in the iGaming industry, but Evolution seems to be able to push through all those challenges. But if you were to find something, we talked about the RNG segment being flat, that's already clear. But is there any other worrying things that we should take into consideration here in Evolution that doesn't speak for Evolution, so to say? Is there anything that could potentially be a leak in the organization, so to say, except for the RNG?
Yeah, I would say that they need to show again now that they can produce hit games, because that was a bit of a slowdown last year. They say they concentrated on other things there with their different initiatives to make their service more easy to connect for their customers and so on. But I think that the games that came last year were, I mean, they're still there. I'm sure they're making money, but we didn't see anything like Lightning Roulette or Monopoly Live or of course anything Crazy Time, of course, anything like that last year. And they had very few games. Now this year they are I mean, they have a huge number of games coming out. They have only showed us a few of them, but they are now coming out, and it looks promising. But I mean, this is very important part of the case of Evolution, that they can make better games than their competitors. And yeah, they need to show that they're still up to it, and so on. And also, of course, we have some competition there from Pragmatic. These days they have grown very nicely. It's very impressive to see this. I remember talking to them on ICE 2020. They had a very little display area with Aaron showed that I talked about how many tables do you have, and I really wrote them off a bit there, because they still were so small, but they are growing very well. But I mean, at the same time, we have to look at this realistically. I mean, Pragmatic is perhaps their, or I would say their most important competitor, but they are much smaller than Evolution. It's not and the people who are new to this, they need to understand that we don't have a situation where the market leader has 40% and the number two has 30% and then someone has 20%. We have a situation where the market leader, if we look at the market outside of Asia, is like 70, 80, no one really knows, but something like that percent of the business. And of course, you always have to look at the competitors. And if Pragmatic will just continue to grow, one day they will be an issue for Evolution. But considering what it looks like right now, I can't really see that happening until perhaps many years out in the future. And also we have such a huge growth in the total business. So I mean, we're not fighting about the scraps here in these companies, because we have, I mean, I don't know the latest numbers, but we're talking about 35-40% growth, something like that, for live casino in the world. And that also gives the possibility for several other companies to grow alongside of Evolution.
Brilliant. Magnus, it's been an absolute pleasure to have you on here to discuss the Evolution
Likewise.
Q1 22 report. We have a lot of questions in the chat. Unfortunately, the hour is not long enough to answer all of them. But it's always great to have you here, Magnus, and hopefully we can
Always
have
great
you
to be
back
here.
soon again. Yes. Thank you so
Okay.
much, and have a good Friday afternoon or Friday morning.
Thank you.
rather.
You too. Bye.
Thank you.
Bye,
Great
Magnus.
stuff. Great stuff. All right, Nico. Super interesting to have Magnus on board here. One of the longest following investors into Evolution. He started reporting Evolution, I believe, like 4 or 5 years ago, even. So he's been very closely monitoring the company for a long time. But shall we don't have that much time left of the hour today, Nico, and we still have 3 reports to go through here, right? Which is Kindred, Betsson, and Kambi. So why don't we jump straight into the quarterly report of Kindred, because to me this is a very interesting report, and it really and I would like to say I would like to draw some comparisons between Kindred and Betsson, who are 2 traditional Scandinavian operators in the iGaming industry, who have been navigating the last couple of years very differently in their strategy. And so we're going to make some comparisons now within the Kindred and Betsson reports. But let's just start on the Kindred report. And I want to just kind of bring up my 3 major takeaways here from the Kindred Q1 22 report. To me, it's all in all, the report is obviously not good, and the investors were expecting a report that was not going to be a pleasant experience, so to say. But if we summarize it into 3 points, I would say that the most important question that Kindred has in front of them is how will they diversify their revenue? Kindred is at the moment deriving something like 85% of their revenue from the Nordics and from Western Europe. And as we know, in Europe, there are regulatory headwinds that can potentially cause major disruption. And the fact that Kindred lost 35% of their EBITDA overnight when the Netherlands shut down back in October tells the story of how important diversification of revenues are in the iGaming industry. Okay, so that's one point that we will cover now in the analysis here. The second point is the fact that Kindred will need to restart the Netherlands when they do get the license without being able to use the pre-existing database. So essentially, Kindred will be starting from day 0 in that market. This is a regulatory requirement that essentially tells the operators that they can't use a database that they have been building in an unregulated environment. And so players will need to create new accounts. The operator is not allowed to email pre-existing players and so on. So essentially, they will need to invest into the market in order to build liquidity again. And third, I want to just point out here, if you're a small dog, you can still be a guard dog. And not that Kindred is the smallest operator, but the strategy that they are choosing is very much mimicking some of the tier 1 operators, which are looking to control their own technology. And so Kindred just announced that they will be building their own sportsbook, for example. Kindred last year, they bought Relax Gaming, which is a serious game studio. And they are pursuing the strategy of also focusing on locally regulated markets. And this is very much what the tier 1 operators tend to do. So essentially, Kindred's strategy is to grow into a tier 1 operator. Essentially, they are not there yet. If we compare them to the likes of Flutter and Entain, who are obviously something to the likes of 10 times bigger market capitalization, but they are very much investing into the future, Kindred. And I think that's important to talk about and to keep into consideration when we talk about Kindred, is that they are really trying to build something for the future when they navigate here. Although in the short term, at the moment, they do have a lot of challenges. And I want to bring up some comparisons to Betsson here, Nico, just to showcase this, and it'll be interesting to hear your opinion here as well. But first of all, let's look at the geographical diversification between Betsson and Kindred. So at the moment, the left graph here with Kindred, they are showcasing that 83% of their entire revenue comes from the Nordic region and Western Europe. So this would be mainly from the United Kingdom, whereas 17% of Kindred's revenue is rest of the world. Compare that now then to Betsson, who have been able to diversify the revenue to the point where rest of the world is 59% versus the Nordics and the Western Europe, which is the traditional markets of both Kindred and Betsson, which are now down to 41%. And this really tells the story that Betsson has been successful in diversifying the revenue streams, whereas Kindred, who have chosen a strategy to jump headfirst into the very expensive market of the United States, have not been able to succeed on that front so far. And just to nail down the point even further, so Betsson is investing hard into South America predominantly, whereas Kindred is focusing predominantly on the North American markets. And this is the efforts that we have seen from Kindred so far. We can see here in the North American, in the US market, in the game winning revenue development. So this is how much revenue in millions in USD they have been making in the last 12 months of each quarter. So we can see here, obviously, as they launched it in the United States, up the slope, and they reached the peak Q1 21, and from there the revenue has been decreasing. Now these numbers are quite dressed up because these are the last 12 months. The decrease of revenue is actually happening quite a bit faster than what this graph would entail, which basically is telling the story that Kindred is not being successful in the efforts of reaching high single-digit market capitalization in the North American market, in the states where they are live. And this should be a big cause of concern internally in Kindred. What's your thoughts here in general of diversification of revenue, Nico? I mean, you talked earlier about the Indian market being a really interesting growth market here, for example. But again, Kindred, the strategy is very much to go after regulated environments and so on. But like, if you are Henrik Tjärnström, the CEO of Kindred, how do you go from here? Like, how do you diversify your revenues?
So first of all, coming back or touching down on the Dutch market, right? Because you just mentioned it on a side note that they can't reuse their database. They have been pretty strong in the Netherlands, so in the Dutch market, and out of a sudden, as you mentioned it, like overnight, they are losing 35% of EBITDA. What we shouldn't forget, even if they could reuse the existing customer bases, the other operators in the market obviously and already caught up on these players, and usually the players stick to one brand, which we can obviously see in the US as well. First of all, players tend to actually gain and get the big bonuses, and out of a sudden they just delete their account and come back to where they actually left from. So it will be very, very hard for Kindred to actually gain their position back in the Dutch market. And as you have mentioned, the US is a quite money-intense market as well. So first of all, you have to spend big to actually be part of the market. These costs don't come cheap. And as you mentioned, Latin America, this might be one of the future markets. If we compare it to Betsson, they are obviously doing great in these emerging markets already. So for sure, it will be interesting to see how Kindred will be able to catch up, or if they might become one of the M&A targets for an already existing tier one operators.
We have been speaking about that for a long time now.
Exactly.
I think it's about time that someone acquires Kindred. They have great licenses. They have great technology in the house. They are ripe for an acquisition. Very low valuation at the moment, and yeah, let's see if that will be the case eventually. I want to show another graph here as well, Nico, just to showcase the differences between Betsson and Kindred strategy, which is the regulated versus gray revenue split. And so we talked about the fact that Kindred are choosing a strategy which is essentially going after regulated revenue, and whereas Betsson is not really taking the same approach in that regard. They are choosing to enter markets where they are comfortable, even if it's in a .com environment. And predominantly we see obviously Betsson being active in Latin America here, which they have been successful in. But again, this just tells the story of two different strategies. Kindred going after the regulated environment is much tougher, whereas Betsson is looking into gray markets. They are not shy to enter gray markets. Just an interesting comparative here as well. So essentially, Kindred, obviously have some challenges ahead of themselves. We can also see that if we look at the revenue split here, GVR by region, we can see Western Europe 52%, Nordic 31%, CES 11%, and other, which is down 6%. And so they have some challenges ahead of them. They also reported on Relax Gaming, which is the in-house game studio that they bought last year, that the revenue is flat in that segment as well. So just like Evolution published, the RNG business is also flat. Similarly, Kindred published that Relax Gaming, which is an RNG game studio, also published flat revenue quarter on quarter. So it's a quite interesting story here. And if we look here on how the markets closed yesterday on the reporting day, we can see that Kindred, the share price didn't move that much. It was pretty close to break even because the report was quite expected. There was a profit warning that was issued, and the investor did not exactly have high hopes for this quarterly report. Whereas Evolution, of course, opened up 11%. Betsson 7.8%, and Kambi down 2.25%. And so, Nico, shall we jump into the Betsson report then as well, and just to talk about the differences here, why the share price jumped 7% in Betsson, and why don't you summarize the quarterly report, if you will, on the Betsson side? What's your kind of summary on that side?
Yeah, so as of now, nearly 22% of the group revenue actually comes from Latin Americas, and 45% of the group revenue, as you mentioned, and as we have seen on the pie chart as well, is coming from the Nordics. So they are diversifying their revenue streams, while the EBITDA is down 7% on a quarter and quarter. And if we just compare this to Kindred, Kindred has an EBITDA which is down 77%. So based on the comparison, Kindred versus Betsson, the one seems to be a success story, while the other one is facing rough headwinds as well. And as you are pointing out here already, just walk the audience through what you just showed, because it's quite interesting to have a look at these numbers as well. Just open up the last graphics again,
Yes.
and just walk us a little bit through this.
Yes, before we do that, Nico, I mean, we can't talk about Betsson without talking about the man himself, Pontus, the absolute legend, Lindh. This is Pontus a couple of weeks ago after the successful launch in Colorado, where Pontus dressed up in an absolutely immaculate, perfectly striped, perfectly ironed American suit. And I want to just applaud Betsson for the humor of actually putting this picture to Pontus's name in the quarterly report, because I think this is just absolutely brilliant. And Pontus is a good friend of ours, and he deserves all the good things. So I hope the cake tastes as good as it looked. But yes, I mean, summarizing Betsson, if we go over here again to the actual numbers, if we look at the numbers themselves, they don't particularly look that impressive. I mean, the group revenues increase. However, the EBITDA decreased by 7% on a year-to-year basis. These are very tough comparatives, should be noted, because Q1 of 2021 was an extremely strong quarter. So the fact that they are actually holding on to the revenue despite losing the Netherlands is something that is definitely worth noting. But the reason why Betsson jumped on the stock market yesterday was because of their ability to diversify revenue. And this is the difference between Kindred and Betsson. If we look at the two quarterly reports, the fact that Betsson were able to increase revenue in Latin America by 174% quarter-on-quarter basis. That is just absolutely remarkable. 22% of group revenue now derives from Latin America. Just absolutely incredible of them to reach those type of numbers. And also the reason is the strategies that Betsson chose when it comes to the North American opportunity and the US opportunity specifically is now turning out to potentially be the right strategy. They did not overcommit themselves in launching operations in the North American market, but instead they focused on Latin America as a growth market. And looking at Kindred now, then this North American journey is turning out very expensive for the company. And we have a comment here as well from our dear Robin Erik Reed as well, which is stating that Betsson's successful long-term investment into sportsbook is paving way for casino growth in emerging markets. We are on the ramp for casino revenues in several markets, and this is true. So in the quarter as well, Betsson were able to publish an all-time high of sportsbook revenue. Much of the growth in the Latin American markets came from the sportsbook segment, and this is an on-ramp into driving casino revenues as well, as Robin rightly pointed out there. But an absolutely brilliant quarterly report by Betsson under the circumstances. You know, if you take the regulatory environment into account and also the macroeconomic factors into account, and the fact that we are in a very tough comparative environment to last year when it was kind of at the height of the COVID influx of new players, so to say. We're gonna see here as well if we can bring up. So just so my three takeaways would be that Betsson is just a machine. They are chipping away every quarter. Nico, they are chipping away. They don't have any world domination plans. They don't have any plans to become the biggest operator in the world. There's no surprises. There's no big moves, and that's just the way we like it. Just focus work. Pontus is leading his company into a solid strategic and a solid future in the right markets where they need to be. And it's just bearing fruit, the fact that they are just grinding and chipping away. Of course, the 174% revenue increase from Latin America is absolutely incredible. They should have all the kudos in the world. They are succeeding in diversifying the revenue there. My question would be, if we take the negative aspiration, is what the B2B, will the B2B ambitions in the US market bear fruit? So while Betsson has chosen to not enter the United States as an operator, although they are live in Colorado, but they are seeing that more as a test case, just to test out the sportsbook. And what they want instead is to enter the North American market as a B2B with a sportsbook product. Now, there's still a question mark if they will be successful in those aspirations, because as we know, Nico, there are many competitors out there in the North American markets. So we're going to cover Kambi after this as well. And you know as well, Nico, I mean, there's many other sportsbooks out there. Can you name a few of the major sportsbooks that we have? Kambi is one, obviously. Betsson.
Pragmatic.
Pragmatic just
they just signed it with the Zone Bet, Aspire Global. for sure worth mention BetConstruct with their sportsbook as well. You have and then you have some of the in-house operations as well. But one thing I'd like to add, and just to back up what Robin has just mentioned. So first of all, what was the driving forces of the Betsson was primarily based on the significant sportsbook growth. And just to give us some numbers, so this segment, we're speaking just about the sportsbook, they generated or provided 56.4 million in revenue, which is up 45%. And coming back to the customer bases, so the customer bases, they climbed from 950,000 to 1.2 million customer, which is an increase rate of 33%. And as Robin just mentioned, you just onboard the sportsbook customers, and then you hand over or you try to transfer these sportsbook customer actually to become customers of your online casino offerings as well. So we might be looking into a bright future of Betsson, and the driving forces are once again the sportsbook.
Absolutely. And we can't forget, as Jake, our managing editor, points out as well, he corrects us as well and mentions OpenBet, one of the major competitors on the sportsbook side as well, of course. The time is absolutely rushing past us here, Nico. There's so much interesting things to talk about, but we have one last quarterly report here as well to cover today as well, which is the ever interesting Swedish traditional sportsbook when we are now talking about this topic, which is Kambi. All right. Kambi also have been facing headwinds in the last 6 months, but if I would just summarize the report, my 3 takeaways from this report would be that Kambi is now waking up to the new reality of vertical integration by focusing on a more modular approach. So traditionally, Kambi was a turnkey solution for operators. They would offer the full package to the operators to run a sportsbook. But as we know, the likes of DraftKings and Kindred, as we go forward, other operators are looking to build their own sportsbook instead products and control their own technology, so to say. And in order to stay relevant to the tier 1 operators, to the biggest customers, they have to pursue a more modular strategy, which means that the tier 1s would essentially plug in a hybrid model. They would use part of the Kambi solution and part of their own in-house technology. And this is something that Kambi is now focusing on fully as we go into the future. So they are choosing the right approach here, obviously, because this vertical integration trend has a potential to disrupt the company. But now they are choosing a strategy where they still can stay relevant to the tier 1 operators. Number 2, a question mark is around the Kambi's geographical revenue split. But they do say in the quarterly report that the 3 biggest sports for Kambi are baseball, American football, and soccer, if you will, like normal football, if you will. And so I would question a bit due to the seasonality in US sports, how that will affect the revenue for the company in the following quarters. Now, when the NFL is past us, the March Madness, the traditional basketball college hype is behind us as well, and we are just at the ending part of the NBA playoffs as well, which means that the North American sports market is kind of in a lull at the moment in Q2 and Q3, and so depending on how reliant Kambi are of US revenue, investors need to be aware of the potential seasonality in US sports. And point number 3 as well is the operational and strategic freedom from Kindred by being able to pay back the convertible bond that they have now agreed on. Kindred is also going to approach a new sportsbook with a hybrid approach. And so again, what Kindred has communicated is the fact that they might still work with Kambi, even though they are launching their own sportsbook, but on a hybrid level from somewhere around 2026 or so. This is expected to come into force. And so those are kind of the three highlights that I would mention within Kambi. We see a decrease in revenue quarter on quarter, but this is expected because they obviously DraftKings have now migrated over to SB Tech, and so maybe investors were worried that the effect of the migration would be bigger than it actually was. We see a downturn of 15%, but if you take away the revenue from DraftKings from the same quarter last year, we see an increase of revenue in the company of 25%. So taking away DraftKings, the revenue increase is still quite positive. I would say as well. And I'm gonna see if we can put up see if this is the right one. No, that's not the right one. See if this is the right one. No, that's not the right one either. I'm trying to get the highlights here of the Kambi financial quarter, but we can read them through still. Basically, what Kambi is saying is that they have had a strong financial performance against a very tough 2021 comparative and Netherlands headwinds, with operator turnover up 25% when adjusting for the migration of DraftKings. That's what we just talked about. They also talk about the fact that they have signed 2 new operators, which are North Star and our very good friend Daniel Gratzner of Maximbet. They has been signed by Kambi as well. And if I believe, I don't want to commit to this, Nico, but I think Daniel had been talking about vertical integration within Maximbet earlier, but he has now chosen them to sign with Kambi, which also tells the story of, the market should not assume that vertical integration is something to pursue. It's still an unproven strategy if this is actually going to work for the operators, because something else that Kambi is talking about in this quarterly report is the fact that they operationally and the product had shown product excellence under when it's under high capacity, like for example during the Super Bowl weekend, for example, the Kambi product was still able to deliver and not have any downtime, which in contrast to some of their competitors who were struggling when the load is high, basically during this time. So the market reacted not very positive to the report, but my interpretation of this report is that it's not a bad report in my opinion. I think they are showing some pretty solid growth. They have set another 11 launches as well, which are current and new partners that are predominantly entering new markets and new states in the United States, and so that's something positive. And the CEO of Kambi, Christian Nylén, is talking about how he is more excited than ever for the opportunities that they have ahead of them in the forward. The markets have been punishing Kambi, and I'm gonna see if we can find the numbers here of Kambi. Yes, here we go. This is the numbers from Kambi in the last 2 years, which is quite interesting because this is at the beginning of COVID. We can see that Kambi were performing extremely well in the first year of COVID, but then obviously the downturn here is when some of the larger clients of Kambi announced that they're exiting the platform, and since then they have been losing market capitalization slowly but surely down to similar levels as just before COVID as well. So maybe this tells the story that the investors have potentially overly exaggerated the possibility of major clients exiting Kambi without also taking into account that there are new market entries and there are new markets and states within the United States that are constantly opening up as well. So there are some upside in Kambi, in my opinion, if we look forward into the future. What would be your closing? I've been talking a lot here today, Nico. I'm so sorry for rambling on here today. We are over time and over schedule and everything. But how would you summarize this, Nico, and just the 4 quarterly reports in general? What's your takeaway today?
So first of all, and touching down on Kambi once again. So what we can see is as soon as one of your biggest clients actually resigns for whatever reason, this also, first of all, it's a do or die thing, right? So either different partnerships can be established or not. And as you mentioned, just with Maximbet, and they started or launched in 10 other US-based markets as well. They pretty much diversified their customer portfolio, which is a good thing. So instead of relying on one big customer, they have been able to diversify it to a little bit more customers. And I'm pretty sure Kambi has a bright future as well. To wrap things up a little bit, especially as you know, people tend to see a lot of the miracle of evolution as being granted for each and everybody of us, right? So if I'm not mistaken, and correct me if I'm wrong, it has been Betsson with an EBITDA margin of roughly 20%, and this is a sustainable business. But if you compare it to Evolution, while being able to grow the overall company by 14%, they can still increase the EBITDA margin as well. And this is just insane. If you just take a look, right, operating revenue from Q1 2020, roughly around 120 million, and the EBITDA margin, if I can read it right, by 15%. They literally doubled the operating revenues, or tripled it nearly, while the EBITDA margin has gone through the roof by at least 400%, and this is pretty much what Magnus has told us as well. So it's the miracle of evolution, and as Magnus stated, when they had a look at different companies, they just found one company which once has been able to follow the footsteps of evolution with this insane growth rate. If I just remember it correctly, once in the past, roughly around 2004, 2005, Porsche had been able to report winnings which had been double the size of their revenues, which led to the assumption that Porsche is an investment bank and they kind of produce cars on a side note. But this has just been based on, their stocks they held for Volkswagen, and they needed to report the insane increase of the stock market price of Volkswagen. So this was just a one-time effect and one-time thing, while Evolution is able to increase which is able to report a linear growth rate on a quarter-to-quarter basis. And we just have to put this into a perspective. And as mentioned, this is something we shouldn't take for granted. And this just highlights what kind of potential Evolution still has if we are speaking about bigger markets, not yet even open, like India or China, Latin, about to being opening up on a state-by-state basis, country-by-country basis. So sky's pretty much the limit for the likes of Evolution.
Sky is the limit, and they are an absolute machine. There is no comparison to this company, and they just go from strength to strength each quarterly report. Absolutely brilliant. Nico, it's been an absolute pleasure, like always, to sit down here with you today. it's essentially Christmas today when we are entering the earnings season. Always fun to unpack and unravel these packages together. But you know what the time it is? I think it's time to head down to the beach with a pina colada
There you
and
go.
enjoy the rest of the Friday. So
Thank
thank
you.
you so much, Nico. Thanks everyone in the audience for listening in today. Take care of each other, and we will see you here next week.
Okay, we will. Bye.